Starting with the first question on depreciation. Now, before you start writing anything in your answer portion, read the question carefully, underline the important dates and the amount, and decide whether the question is about your straight line method of depreciation or written down value method of depreciation, and then only start writing something in your answer portion. Otherwise, if you do it in a hurry, there are chances that you will make mistake. Okay, Raja purchased a machinery on 1st October 2013. So underline the date. Date is very important to find out the amount of depreciation at a cost of rupees 2,40,000 and spent on installation charges rupees 20,000. So first of all, you need to know that the installation charges are my cost of machinery, should be added in cost of machinery, because installation charges are made before the machinery is actually put to use. So any expense before it is put to use, say installation charges, some export or import duty, so any other lawyer expenses to bring that machinery in, all those expenses will be capitalized and will form part of your machinery. So the cost of my machinery will be 2,40,000 plus 20,000, that is your 2,60,000. So first I will do an entry, machinery account debit to bank on 1st October. It is coming in 1st October 2013. Machinery account debit to bank, it is 2,40,000, and I have paid installation charges. So again, to bank or cash, whatever, that is 20,000. So the total cost of my machinery is 2,60,000. Okay. Firm charges depreciation at the rate 10% per annum on original cost every year. So listen, pay attention, original cost, that is on 2,60,000, the firm is charging depreciation. That is, you have to adopt straight line method of depreciation and not written down value method, because here it is clearly stated on your original cost, which is 2,60,000. So straight line method of depreciation. Prepare machinery and depreciation account for 2 years. So let's start. My year ends on 31st March. So 2014, 13-14 is the year. So 13-14, and on 31st March, what do we write here? By depreciation, because the entry is depreciation account debit. You are charging it on depreciation on machinery. So depreciation account debit to machinery. So I will not write here to machinery, but by depreciation out here. By depreciation. And how much is the depreciation? It is 2,60,000 into 10% per annum. So 10%, and the machinery is put to use on your 1st October. So before, if it is for the whole year, charge the full amount of depreciation. But for the last 6 months, within the last 6 months, if it has been put from 1st October to 31st March, any time, even if it is on 31st March, charge half of the rate. So 1st October. So if it is April, May, June, July, August, September, till September end, if it has been purchased, you get the full depreciation. But from 1st October to 31st March, that is the last 6 months, then you get only half of the amount of depreciation. So just half it, that is 6 months only you will get out of 12 months. So 6 by 12, and that comes to 13,000. So 13,000 is our depreciation. The remaining will be my balance. By balance carried down, and out of 2,60,000 subtract 13,000, that will be 2,47,000. So coming on to your next financial year, 2014, 1st April, I will just get down the balance. To balance brought down. Whenever I get a fresh balance down, I write brought down. From here, take the amount here, 2,47,000. Okay. Now we have to again charge depreciation on your year end. So 2014, 15. So 2015, and it is 31st March. So by depreciation, because the entry is depreciation account debit to machinery, in machinery account I have to write by depreciation. How much will be the depreciation? 2,60,000 is the amount, because on original cost, the original cost is my 2,60,000 into 10%. So it comes to 26,000. Okay. So for 31st March, the remaining balance will be, first I'll add up 247 and here okay. By balance carried down, okay, and the amount will be 247 minus 26, that is 221,000. So opening for 2015, 1st April, it will be to balance brought down, and it is 221,000. So this is how I have made a machinery account for 2 years. Now also I need to make the depreciation account. So entry is simple, depreciation account debit to machinery. In first, wherever I have depreciation here, that needs to be posted. So on 31st March, my entry is 31st March. My entry is depreciation account debit to machinery, and it is 13,000. Now depreciation is my expense and it needs to be taken to P&L debit, that is profit and loss account debit. So transfer it to profit and loss account by profit and loss account. And that is 13,000. Now 31st March again for the next year, depreciation account debit to machinery. Okay, so that is in the second year it is 26,000. So write 26,000 here because the entry is depreciation to machinery, and on 31st March again write by profit and loss account, transfer it to profit and loss, which is 26,000. Hope you have understood the concept. Then when it is straight line, apply the depreciation on your cost. And second point, if only it is the last 6 months during which you have taken an asset into your books of account, just divide the rate of depreciation by 2, that is apply depreciation only for the last 6 months. And the important point is, even if it is on the last day, say 31st March, the closing time, but still you will get full 6 months depreciation, that is from 1st of your October to 31st of March. Anytime if you purchase a machinery at that time, take depreciation half of the rate what it is given. We have a second part of this question as well. So let's see that. Suppose the machine was sold on 30th June 2014 for rupees 1,50,000. Show its treatment. Okay. So 1st April, the balance of the machine is 2,40,000. That I will show you how I am getting this. 2,47,000. That is on 1st April 2014. To balance brought down. See, in 1st April 2014 to 31st March 2015, there is a change that in between only April, May, June, 3 months only the machine has been kept, and then it is sold for 1,50,000. So I am taking that amount 2,47,000 from here. That here, see, 2,40,000 is the amount standing. So 2,47,000 as on 1st April 2014. Now what happened is, for till 30th June I hold the machinery. So on 30th June 2014, what all happens is, I sold the machinery for 1,50,000. So bank account debit to machinery, bank account debit to machinery. In machinery account I will not write to machinery account. So by bank I am receiving and the machinery is moving out. So credit the bank by 1,50,000. Bank account debit to machinery account, that is debit the bank, credit the machinery, and when you are crediting the machinery, put it on the credit side. Okay. Now for 3 months I need to charge the depreciation to actually come to what was the profit or the loss. So by depreciation, how much? On your original, it is on your straight line method. So original cost was 2,60,000. On that 10% is the rate, and on that for 3 months, that is April, May and June. On 30th June you sold. So for depreciation for 3 months needs to be put in, and that comes to 6,500. That is your depreciation. Now out of 2,47,000, I received 1,50,000 and 6,500 by bank and by your depreciation. The remaining balance will be your profit or loss on the sale of machinery. So this total should be 247, and whatever is the balance will be transferred to your profit and loss account. So by profit and loss account, this is a loss. So loss, how come a loss? 2,47,000, the cost is more than what I receive from bank and less depreciation. So loss on sale of machinery. And this is the balancing figure. This is 9,500. we'll do some more questions on this, on the topic depreciation, and then it will be more helpful to you.